All right, traders, I'm going to be doing an in-depth price action analysis on the SPY. This is going to help give you a better understanding on when to be buying put options and when to be buying call options. We're going to be going over both sides of the potential moves heading into this week, and I'm going to keep you up to date further into the week, so make sure you subscribe to the channel. This is going to help prepare you to trade the best setups at the best prices. Let's get straight into the video and smash that like button. So first things first, in terms of the SPY, we have now seen a triple bottom. You could see right here, there's a gap to fill below at $381.95. And you have a lot of support right here as well at $380.55, right? So this is now the third day in the row where the SPY has bounced off of this 381-ish level. So with that being said, I want to do a quick review of the key make it or break it levels. We're going to be going over the low end of the channel, the middle of the channel, and the high end of the channel. So first things first, let's start off with the low end of the channel. So the low end zone for the SPY is going to be this 381.50 to 380.50. That's going to be the low end of the zone. That's where your support is. Now, in terms of the middle, where is the middle end of this overall channel? The middle end is going to be right here at $385.30. That's what we're going to be calling the middle. So just to show you in terms of how it is that I'm coming up with these levels, I'm looking at the past 3 days of price action where it's been bottoming and topping. And I'm also looking at the daily chart. You can see right here on the daily chart, the high of this daily candle is 385.25, which is a make it or break it level. If that reacts as a resistance, the SPY is known for selling off to that 381 zone. If it breaks out and reacts as support, it is known for overall going up to that top end of the channel, which we're going to call $388.55 to $390.12. So again, the three key levels that I need you to be aware of: the top of so the bottom of the channel, 380.50 to 381.50. That's the 1 point zone of the bottom. The middle, 385.30, that's the make or break middle. That's going to help give you direction whether it's going to break out or if it's going to break down back to low in the channel or break out to the high of the channel. And then in terms of the high of the channel, we have two gaps that are waiting to fill above. We have a gap to fill above at $388.55, and we have a gap to fill above at $390.12. So let's kind of go over, let's take a look here at the 5-day, 5-minute. So in terms of the SPY, it has been pushing for lower lows barely, but it has been retracing back up as well. In terms of extended hours, it is slightly up. One thing that I want to bring awareness to is, like I said, 385.30, make it or break it. If that breaks out and reacts as a support level, we will start to see a gap fill play. If you see this break above this 385.30, it's reacting as support. It'll be bound to break above this resistance. You have a lot of resistance on the SPY at 386. Once it breaks above 386, and it will happen as long as 385.30 can turn into support and break out, we will be on track for the bigger move up for the gap fill play to 388.55. The best price for put options heading into this week for nice in and out scalping opportunities are going to be these two key levels. Obviously, the higher the level, the better. But in terms of level of interest for puts, as of now, with this triple bottom, it's going to be 388.55, 388.55 and $390.12. That is going to be the put zone where I'm looking to scalp into this week. That's where I'm looking to play puts. Now, in terms of the middle, we have bottomed 3 times in a row at that key support, and it keeps trying to push above this 386. It keeps trying to push. So once it breaks above that reacts to support, that's when it's going to push back up. If it reacts as a resistance and starts to break down, we'll be on track to drop to about 384 to 383, right? And then in terms of the best price to buy calls, if we do fake out again at 386, if it fakes out again at 386, it doesn't break out, then look to dip buy calls towards that low end of the channel, which is going to be 380.50 to 381.50. So those are the key levels. That's my thoughts in terms of, well, what's going to happen first? Is it going to go back to support at that 380, or is it going to fill the gaps above? To answer that question, you need to study how it reacts at that 385 to 386 zone. If it reacts to resistance, it goes back down a little bit. If it reacts to support, it goes up a little bit. Now, in terms of overall thoughts on this daily chart, For the micro, I would say we could see a little pullback, but I would say we're kind of due for a bounce. For the micro, I would say overall we're due for a bounce. I could see one more red day, but overall, I would say we're kind of due for a bounce, right? And we're due for a gap fill. We really are due for a gap fill play to 388.55 within time. Not saying it's going to happen right away, right? That's kind of my thoughts on the overall micro. From a macro perspective, within time, it's going to take some time, but there's going to be more good put swing trading opportunities coming up. I could see overall from a macro perspective within like weeks, I could see the market going lower. I could see it continuing to be bearish. I could see some good put opportunities at this previous support at these gap fill levels. Got to see how it reacts. So in terms of macro swing trades, what I would be waiting for is I would be waiting for the gaps to fill. I would be waiting for some consolidation on the daily candles. I'd be waiting for some red bearish candlesticks to form on the daily chart, which is not determined until the last couple of minutes into close. And then that's where I would be looking to swing trade puts, right? But the way I see it right now in terms of like micro point of view, we can have a little pullback, but overall we're due for some sort of bounce based off of how the daily chart is looking. It could be like one more red day and then it starts to recover. I could see something like that. So one more level that I want to bring awareness to is this 384.09. So the previous closing prices, they are always key levels. Sometimes, they're special than others, but this 384.09 will be a make it or break it level as well. If the SPY maintains and holds above 384, it'll be overall bullish for tomorrow. If it breaks down, reacts as a resistance, it'll start to climb bearish. So those are the key things that I want you to understand in terms of make it or break it levels. Just to show you, some potential trend recognition and things to look for, just to give you some tips and tricks that I like to add into these videos in terms of like nice scalping opportunities, history tending to repeat itself. So what do we know about the SPY in terms of the past 3 days? We know there was a lot of support at this 382 to 381. We also knew there was a gap to fill below on the daily chart right here at this 382. Today's the day we're at triple bottom and there's gaps to fill above, right? So we knew that if we were paying attention to the daily chart. Now, in terms of, what would be a nice little scalping opportunity where the confirmation is bullish, meaning there's a confirmation that it is confirmed to be bullish and it should uptrend and it should work 70% plus of the time. This is a nice confirmation of history repeating itself. Notice how right here on the SPY, right, just to show you this is a 30-minute chart. The 30-minute chart is going to help give you direction for the overall next 30 minutes to an hour. And you can see right here, this is a nice bullish trend reversal candlestick. It's downtrending, it forms this candlestick, it starts to rocket. It's downtrending, it forms this candlestick right here, it starts to rocket, right? So if you were to just pay attention to that trend and pattern of history repeating itself, and you could see it was at the same support level as well, that would have been a nice opportunity to scalp calls in the morning. Now, another opportunity for scalping calls would be right here. Notice how on this candlestick right here, you have this nice green bullish hammer, you can call it, at key support on the 30-minute. When it forms, SPY starts to rocket again, right? So when that 30-minute candlestick closes, you know what should happen if history is going to repeat itself. And you can see right here, SPY did the same thing again. It formed two green candles. It formed two green candles. It forms that same bullish hammer. And then what does it do for the next 30 minutes to an hour? It uptrends. What does it do for the next 30 minutes to an hour? It uptrends, right? So that's to show you the power of history repeating itself and how to use candlesticks. So yeah, I wanted to bring awareness to that. I wanted to bring awareness to some of the patterns within the SPY and support and some nice potential dip buying opportunities that could help you in terms of support and resistance overall channels. But yeah, that's the thoughts, and that is the main analysis heading into tomorrow for the SPY. And then in terms of other things that I need you to be aware of is, if we somehow get crushed earlier, into this week, if we somehow just get crushed early into this week, because I can see one more red day, I can see a possible break of this channel, but overall I feel like it wants to go to 380.55 within some short-term micro time, but we could see one more nice red day in my opinion. If that were to occur, I would say the best price to buy calls if this 380.50 level cracks is going to be this 377.91. And that's where I would consider on swing trading some call options if the candlestick is bullish, meaning if it looks green and bullish once it fills this gap right here. So for example, there's a gap to fill right here. This is a green bullish candlestick. You can see the next day it went higher, right? So I would do the same thing in terms of swing trading at 377.91. And if we get bullish confirmations on the intraday chart, I would also scalp and day trade at that level, right? So I want you to be aware of that, because that's going to be a good call opportunity, whether it's going to be a day trade opportunity, a swing trade opportunity. Time will tell in terms of confirmations, but that's another thing that I want you to be aware of. So that is my price action analysis on the SPY. If you enjoyed this video, make sure you smash that like button, subscribe to the channel. With that being said, that's my number one focus. That's my main focus. So in terms of today, one thing that I want to bring awareness to. So let's go over some tips and tricks to trading SPY, right? Because my main goal as a trader is to master the SPY. I'm not looking to master a bunch of different stocks. I'm looking to master the SPY. And some tips and tricks that I've learned along the way, I'm going to keep adding these within the videos. So a couple things I have noticed. So I'm someone who I started off like trading small caps. So in terms of small caps, I would love shorting them in the morning. I would find these big gap up plays, and then once the market opens, everybody sells and takes profits and the gap starts to fill below. I would love trading in the morning. And then I took that into mid cap and large cap stocks, and I was doing pretty good trading in the morning. But then I started noticing in terms of, my strategy, I want to position myself where it is impossible, as long as I stick to my rules, and even if I break my rules, it's nearly impossible to take a big loss, to have a big red day, to have a big drawdown, right? That's something that I want to have within my strategy, right? So one way that I've been figuring out that can help prevent big losses is to actually skip the market open, is to not trade the SPY directly at the market open. I want to bring awareness to that. If you've been following this channel, I'm someone who has loved trading at market open. I'm starting to realize it's extremely volatile. It's extremely risky. There's lack of trend direction. There's a lot of flip-flops, and it's kind of like gambling in a sense. It truly is. You have to wait for the patterns to show themselves. You have to wait for confirmations of history to repeat itself. There's going to be lack of history. There's going to be lack of patterns. There's going to be lack of how is the price action? Is it going to be an overall one-sided trend day? Is it going to be a choppy day? Is it going to be a slow day? Is it going to be a volatile day, right? You have to get a feel for the SPY. In order to get a feel for the SPY, you have to see what is the SPY doing, and it takes time to see how it's reacting today, how it's moving today. And then when you trade it, you're going to get a better understanding and a feel of how it's overall moving today, which will help give you a better understanding as well when you're actually in the trades. So one thing I would advise against is to avoid trading directly at the market open. Now, if you see a strong pattern and it's like, 9:45 a.m. or 10 a.m., then fine. If you see a strong pattern of history repeat itself, they come around. But for the most part, give it some time. Like wait until like 10 a.m. or 10:30 a.m. I'm really talking about just like directly at open, like the first 5 to 15 minutes. I would avoid it. I would avoid those first 5 to 15 minutes. And if you do wait longer, in most cases, the better. And I'm finding, in terms of volatility, if you're looking for a really good volatility, I'm seeing a lot of good opportunities at this 11:30 a.m. I'm seeing a lot of good opportunities at power hour. The chart's already developed. Probably was in a trade or two before then, so I get a feel of the price action. Also been watching the SPY, so I get a better understanding if it's choppy, if it's volatile for the day. So that's some tips that I want to bring awareness to in terms of the SPY, because it's highly predictable. And I'm telling you, if you just wait throughout the day, you'll start to get a feel for it and a read for it on the opportunities that the SPY has to offer. I mean, it's crazy. It literally did the same thing it did yesterday. You could see right here, there was a nice pullback at 11 a.m. Very nice pullback at 11 a.m. And look at today, very nice pullback towards this 11:30 to 12 a.m. But in terms of confirmation, you could say, Will, it pulled back at 11 a.m. Yesterday. If you were to buy puts at 11 a.m. right here, you would have got squeezed and maybe stopped out. Well, there's a thing called confirmation, so that's the time it started to pull back around. But in terms of confirmation, look at this candle and look at this candle. And then what happens? It starts to drop and it starts to drop, and it's at that key 386 resistance. And I had puts there and I literally got stopped out towards the top because I didn't enter at the best price. But don't nickel and dime it, man. If you see there's a lot of resistance right here at 386.25, just risk the extra 20 cents. That's the mistake I made on that. But I mean, overall, it wasn't that great of a day in terms of SPY. I was doing very, very well. I was up 2.37% on the day. And then I finished up 1.17%, gave back some profit, continued to trade. But big shout out to members within Trader Society. And Ricky Garcia, one of the most consistent members currently within Trader Society, absolutely crushing it. And he's trading part-time. He also works as well. So that's truly amazing what he is doing. So big shout out to members within Trader Society. And then in terms of some other tips that I want to bring awareness to with the SPY and, just trading in general. So, when you're adding to a position, make sure that there's strong confirmation and it's not based off theory. When you're adding into a position, make sure there's a strong confirmation, there's a strong reason to be adding there. And if you see it and you get a feel for that trade and you like it, then add some size to it. That's completely fine when you see that strong confirmation. Do not add purely based off of a support or resistance level. When you're adding, make sure it's strong conviction of a confirmation that you just noticed. So I'm going to give you a key example of what that can look like. So, yesterday at around 11 a.m., SPY had a nice pullback. Now, in terms of a nice bearish confirmation, save this candlestick. This right here, this is very bearish. I literally got stopped out of my puts right here. And this strong bearish confirmation formed, and it was looking so bearish when it formed this candlestick with a lot of volume, a lot of selling. So if you got stopped out, just get back in when you see the bearish confirmation, or just risk a little bit more and don't get stopped out, and then add into confirmation. When you get these lower highs, when your support right here cracks and reacts to resistance, add some into confirmation. Once you get a feel for that trade and gain some confidence and get stronger confirmations, add into it. Or if you got stopped out, get back into it. Do not be afraid to get back into it. So that's another tip that I want to bring awareness to. Another thing, ways to prevent big losses with options. Do not hold for a long period of time, right? There is strategies where you can hold for a long period of time and you will not lose a lot of money as long as you're sizing in very, very small. But I'm against holding. I'm someone who likes scalping in and out. SPY has way too many flip-flops throughout the day for me to hold this for a long period of time. And I'm not trying to develop a strategy where I'm right for a very long period of time or for the entire day. I'm just trying to adapt and take advantage of the flip-flops and take advantage of the trends and take advantage of the patterns in history to repeat itself. I want to be as free as possible. I don't ever want to be stuck into holding a position. So one tip that I bring awareness to is do not hold for a long period of time. Focus on getting the best entries at resistance for puts and support for calls. Focus on strong confirmations, add into those confirmations. Focus on the back side of the move and the front side of the move. Quickly scale out of calls on rips and puts on dip. So when you're buying puts, they should be at key resistance on green candles, and you should be scaling out into the dips on red candles. Once you see that first green candle, after it had a nice downtrend, when you see that first green candle at key support, then scale out of puts. And then in terms of calls, you should be buying towards dips and then scaling on to the rips once you see those red candles at key resistance. And do not hold for a long period of time. Position sizing for beginners should be no more than 10%. If you're more professional and want to take bigger risk, then 20%. I would not take a bigger position size of 20%, especially initially. If you enter a trade and then you're starting to get strong confirmations, higher convictions, you like the feel of the trade, you like how it's moving, then add some side. I would not add your size in all at once, and I would keep your position sizing between 10 to 20% per trade max. That is all you truly need. If you trade same-day expirations, you must understand that these are not meant to be held very, very long. One of the disadvantages to trading a same-day expiration is it is a way to create a very big percentage loss very, very quickly if you're on the wrong side of the trend or on the wrong side of volatility, or if you get a poor entry. You have to trade these near perfect. With that being said, if you choose to trade them in order to prevent a big loss, you must size smaller. Do not size big on same-day expirations. It shouldn't be more than 10%, even likely less than that. I would encourage most people. So my strategy really is focused on scalping in and out, perfect timing, perfect entries. So same-day expirations does work for it, but I'm trying to find more of a balance. And I'm finding for me that perfect balance has been a one-day expiration. The returns percentage-wise are going to be a lot less, but it's a nice balance. The contracts are more, so you can make more money, obviously, but the percentage returns aren't as great. But it's easier to protect risk when the contracts aren't as volatile, and you can hold them a little bit longer. It gives you more of a balance of holding a little bit longer. It gives you more of a balance if you wanted to add to the position. There's more of a balance, and it's more safe, in my opinion. So that's something you could experiment as well. Want to bring awareness to that, right? Never bet on a reversal against the trend at a poor entry, right? So in terms of reversals, I love trading reversals. I have created a lot of losses for myself trying to, bet on a reversal without waiting for confirmation. So wait for strong confirmation, wait for the best levels. If you see it starting to go in that direction of favor, then enter the position, right? And then also focus on trading the trend and focus on adapting. Always ask yourself, with the way you're trading, with the strategy you're developing, with your risk management, with your psychology, with the way you trade every single day, it should be in a very similar fashion, very similar in terms of sizing. Everything should be similar for the most part. What are you optimizing for in the long term? In terms of what it is that you're doing every single day as a trader, where is this going to get you in the long term? I'm telling you, if you can consistently make a 2% return and compound that count on a daily basis, that will change your life in one single year. I mean, if you pull out a compound interest calculator, say you had like $20,000, you start with 20K and you made 2% daily compounded. 1 year later, not including weekends, it would be at like 3.5 million. And then if you did it again, it goes to tens of millions to hundreds of millions pretty rapidly, right? So consistency, discipline, optimizing for a strategy where you shouldn't even be having red days due to your risk management and position sizing. And if you do have a red day, it should not be a big red day. Make sure the number one focus is eliminating red days and having no big red days. I'm telling you, keep it at number one, no big red days. And then number two, no red days. But just make sure that you have no big red days. That is the biggest setback that you can possibly have as a trader. And I explained to you the ways to prevent that. In terms of strike prices, go with the ones that are at the money. In terms of expirations, go with 1 day expiration. If you're doing same day expirations, you can't hold them long. You must time it perfectly. You must size in less, right? All depends on your style of trading. If you want a more balanced approach, go with 1 day expirations. If you want to time it perfectly, get in, get out super quick like a sniper, and you like those bigger percentage gains, and you're good at cutting losses quickly on those percentage gains because they are going to be bigger, then do the same day expirations. And then some days it's going to be 1 day, some days same day, but overall the strategy can work with same days. But yeah, I just really want to bring awareness to all that stuff. So those are my tips, those are my tricks in terms of, some education for you guys. With that being said, if you do want to be a part of Trader Society, it's going to be the first link down below in the description. Everything is explained in terms of what is included within Trader Society on that first link. You get access to the chat room. You get access to the members and networking opportunities within the chat room. You get access to direct messaging members and I. You also get access to the video lesson library where you get to learn how to master options, calls and puts, how to trade the SPY, how to trade small caps, how to trade stocks in general, how to trade both ways, how to trade the unique gap trading strategies that I've created, risk management, position sizing, psychology, mindset training, and the live trading stream, the voice channel. There's so much more to it. If you want to check it out, is the first link down below in the description. I will see you guys tomorrow.